Hello everyone, I'm recording my live session on the E-mini S&P 500 futures. The time frame is 2000 tick chart. First of all, Happy New Year's everybody. 2026 I hope is going to be a great year for everyone watching this video. Um, Yesterday there was no trading, and the days before volatility was very low. There wasn't much price action, so I decided just to not post vids. But today we're back. So today it looks like we started with a trend up. You have small gaps. You can consider gaps as normal candles. So I'm gonna start the trend line from here to the top, and it looks like it fits this channel very cleanly. Um, Now we have break. Downtrend has break a new low. We still expect new high for the uptrend. If we draw our Fibonacci levels here, something like this to the top of this, it looks like it's retraced almost at the 61% mark. It didn't fully pass it, so I'm gonna consider this trend still in play, especially because it's quite strong, quite steep, and this is overnight. So I'm still gonna expect new high here. You have a new low, first entry short, failure, second entry short. Second entry short, but the bar is a doji at the EMA. This downtrend looks quite big. It's getting quite shaky here because you have another push lower. Sorry. You have another push lower even after new low. So the downtrend may continue. You would rather want a really clean failed second entry short here, or just not take a trade and skip it. But there was a higher low right after that confirms it with a really clean bar, really good bar versus right off at the EMA. Close it at this very high. It's quite big though, 5.50. The volatility is quite high anyways, so you do want to size down anyways, but you do want to take a limit order on this trade if you keep the same size. Now you do have new high for the uptrend. So the trend has played out, and now we're waiting for the new market cycle, which is a downtrend. As you can see, we started going into downtrend. Now, if you zoom out, the bias looks quite neutral. Push up, push down, push up, and another push down. So you might consider a range here, but I wouldn't say this is a range, simply because the trends are very big. A range doesn't look so good here, and the bias is not so neutral. Uptrend, this is also an obvious downtrend, very big. So I'm gonna play it like this. I'm not gonna say that this is a range. And now, after breaking new high, new market cycle, and we start a downtrend. The downtrend is very steep. Just off of a single glance here, you can see that there's no trade at the EMA. And after you start going into here, you have new low. There's a trend for every price movement on the charts. And now it looks like you have uptrend, breaking new high. So uptrend is played out. You do expect new low for the downtrend. Downtrend is very steep, so the EMA is probably going to hold. So you really do want a reversal here, like second entry short. So we're going to count from this low, new low, first entry short, failure, second entry short, failure, double trap. Double trap at the EMA. The signal bar does have a small tail at the bottom, but it's nice right off of the EMA. I don't know why this looks a bit weird. When thinking about this consciously, it's a nice trade. The tail isn't so big, but it looks a bit weird for some reason. But I would say this is a nice double trap to take. Brought two legs up. Downtrend is really strong. So it's a nice trade, but it doesn't work out, unfortunately. This can happen. You gotta move on. Alright, so we pushed up. We didn't hold at the EMA. We continued pushing up, which is weird. I was eyeing a wider channel like this, but this is just too wide. You can't draw this, and you immediately explode up. So you can't really find the channel here. There's no real channel other than this kind of. There's too much empty space at the bottom here. So I don't really know what to draw. I'm gonna draw something like this, but this does visually look like, if you started from this explosion up, this looks like two legs up, perfect measured move. So visually, this looks like two legs up and you start reversing. You still expect new low for downtrend. You haven't pulled back too far, and now you have a push below the EMA. Push below the EMA, the best setup after a break is a failed second entry long or failed second entry short in an uptrend. But for now, we're in a downtrend. In the case of a downtrend, failed second entry long is the best setup after a break because it's a reversal setup that capitalizes on the market reversing. The thing is, we've pushed too low here, so you can't really take a failed second entry long at this point. You would like something like a second entry short. No real setup. This is just a first entry short. No real setup, and you make new low. Now, this is what I like to call area of development. This is what is called area of development. It's when you need more price action to judge the next market cycle. So break a new low, we want to wait a little bit, be patient, sit on our hands until we make another established trend, and that is where price action really works the most. There is this second entry long that's honestly tempting, but it seems like, just for me, the market is too bearish. We keep making multiple legs down. I'm eyeing some wider channel here, like this or something, and the market is just a bit too bearish. Even when the bias is quite neutral, you still make continuous lows. So I'm honestly scared of taking this trade. It is quite a nice trade though, but there's just too much conflicting variables. Um, Uptrend, new high, first entry long, failure, second entry long, two legs down. You can't draw something like this, but you can draw something like this because this push is quite strong. So the secondary, the pullback, the Titan channel is still in play. But this is an FBO, which is a failed breakout. Sorry, failed breakout added congestion. The nature of failed breakouts. Most failed breakouts have the Titan channel still in place. That is the nature of failed breakouts. You have to take double bar entry. You're scalping way too close to these highs. There's not enough room left. So yeah, there's too many conflicting variables. You shouldn't be taking this trade, and you should be skipping it, in my opinion. Also, I think I've just noticed that this is overshoot actually. Overshoots just completely crosses this trade, impossible to take, especially after overshoots. You have to skip the very first second entry log after overshoot. Overshoot generates stronger pullback. We expect a break, so you definitely cannot take this. So yeah, I wouldn't say this is a good trade at all. On second thought, it's actually even dumb that I considered it. Overshoot leads to break, and now we expect new high for the uptrend. If the channel was still not in play and we didn't expect new high, this would have been a really good trade. Why? I'm just gonna explain this education wise, because as you can see, towards, let's say this was break, towards the very end of the trend, the bars are getting bigger and bigger. As you can see, this bar is really big, no wicks at all, which shows that the bar is really strong, and this indicates depletion, and this leads to stronger reversals. So a lower high setup like this is takeable, even if you've just had break a new high. Yeah, I just wanted to mention that because it's really good educationally. We might have a possible second entry short here. It's quite nice. You've retraced too far to expect new high for the uptrend. I've done the Fibonacci and it's definitely over 60%. And now you have this trend line that it's bouncing nicely off of. All that's left is to take the trade and win. And it's also quite low. I got filled. It's quite low risk for the ATR. It's 3 points targets, 3.4 ATR. You could even take 3.5 here, but I think I'm gonna settle with this just to get the momentum going, because this is the first trade I'm gonna be taking in from a while. We've done the work now. We just gotta wait and let the trade play out. Few more ticks. It works actually. Yep, it worked. But I've just noticed that we have had overshoots. We've had overshoots. The two legs up are really broad. Option is played out. You still need to go to the low of this range. Because of this overshoots, the trade might have not been valid, but yeah, it might have not been valid, but I didn't notice this overshoot. Unfortunately, I've missed a really good setup. I set my limit order, but I didn't get in time, and price just made new low without me. Overshoot already didn't work by creating the break. Two legs up, as you can see. Two legs up, and you start reversing. You expect new low for the downtrend. You're still in the middle of this range. Middle of this range isn't the best place to take a trade in, but that is because if there is a lot of congestion or the EMA is getting between the middle of the bars like this, for example, then it's not good to take. But here it's really clean, double top, two legs up, visual second entry short, add the EMA while you expect new low. This is just a really textbook setup. There's no conflicting variables at all. There's nothing bad about this trade. So yeah, this is an A+ setup. It's a much safer than this trade I took too, because overshoot already created two legs up and break. Here, this is the very first second entry short after the overshoot, and you shouldn't be taking it. This one is not really a valid setup. After looking into it more, I don't think you can take the setup. I think I jumped the gun a bit too fast. I didn't see overshoots, to be honest. I didn't notice it because I drew the trend line in the video, like while I was recording, so that might have slipped. But yeah, if you took this setup and skipped this one, then really well done. I actually have to go now, so I'm gonna wrap everything up with the one trade that I took, which was a winner but wasn't the best trade. Good luck everybody with your trading, and see you next time.